A year ago, when we reviewed India's residential or home market, we heard most stakeholders pronounce that the worst is behind us. Well, on the policy front, affordable housing had got an infrastructure status boost. First-time home buyers had been given an extra tax benefit on home loans. FDI norms were further relaxed for township projects. So everyone believed, if not prices, at least sales will start picking up. But nobody had a clue about demonetization, did they? Nobody could guess that the loss of currency and all the noise surrounding black money in real estate will push home buyer sentiments to a new all-time low. Close on its heel came RERA, which has pushed the industry or builder sentiments to an all-time low. And the result is India's residential sector is struggling to see any light at the end of the tunnel. And this, despite home prices hitting a 5-year low adjusted for inflation. So we ran a Twitter poll to sense the mood of the home buyer, and here are the results on Urban Reality. 26% said that they will buy now. Actually, I was quite happy to see that number. It is a tad more than 1/4. But 37% voted a no to buying, saying renting is still cheaper. Living on rent is cheaper than actually buying. So they don't believe that home prices are still cheap enough. And an equal percentage voted saying despite RERA, their confidence is still low in the India's real estate sector. So today we've gathered 4 big voices to tell us what they think of the residential market and whether it's a good time for home buying. Joining me today for this discussion, Anish Puri, Chairman, Anurag Property Consultants, Amit Bhagat, CEO and MD, ASK Property Investments Advisors, Sameer Jasuja, Founder, Prop Equity, and Harsh Rungta, CEO, ApnaPaisa.com. Gentlemen, thank you so much for joining me. Let's begin with addressing the big question. Why are home buyers still not confident despite us saying, look, RERA will bring in transparency, prices are at an all-time low? Anuj.
So, Manisha, my thought is that it will bring in confidence. The RERA is going to get fully applicable from 1st of August. Give it a few more weeks after it is applicable, you will see that 25-26%, which is saying is that we're ready to buy now, start to increase because there's going to be confidence. And they will also see a lot of the consolidation in the developer space. So I have no doubt in my mind that by the end of this year, if you were to do the polls again, you would see is that 25-26 rise up to about 35-40% because there's going to be more confidence and they would have seen the impact of RERA in consolidation of the developer community.
Okay, so we will run that Twitter poll 6 months from now at the end of December, and hopefully 2018 January poll will be much better. You've said 35 to 40%. So, Amit Bhagat, every conference that I have moderated, most developers have come back, and you will notice that there is no developer on our panel today simply because buyers believe they don't have any other way but to say that prices are likely to go up and sales are not looking too bad. Having said that, we've been told that it's media which is really dipping the sentiments and the buyers are worried because we keep screaming out headlines that home prices are stagnant or declining. Investors are exiting. You have unsold inventory. Even though it's shrinking, the number is still very high at 6 lakh units. Projects are delayed across the country. And of course, RERA has also been very painful in the dilution of rules. So these are some of the key reasons that home buyers seem worried today. Would you say that their reasons are not, reasons are valid rather, let's say?
In fact, I would like to add one more reason, which is the GST.
Okay.
And all this regulatory...
GST in home buying?
GST in home buying. Because that is also added to a little bit of ambiguity. All these regulatory reasons are actually a step in the right direction for bringing back the confidence of the end customer. Once RERA is implemented, I am also very confident, like Anuj, that a year down the line, you will see the end customer coming back to the market. They are sitting on the fence, and for all the state of affairs, nobody else is to be blamed but the developer himself. Because his track record of timely completion and giving quality as committed has never been there. That commitment has never been there with most of the developers. So with the RERA ambiguity and implementation and GST implemented in the right spirit, you will see the end customer coming back, and they are just sitting on the fence and waiting for the right opportunity.
All right, so let's now start addressing on the reasons why the home buyer should come back into the market. If you're saying that this percentage is likely to increase from 26% to, let's say, about 40% by the end of the year, other than RERA, are there any compelling reasons? Sameer Jasuja, this question is to you, and I'm now going to divide this entire debate between first-time home buyers who are sitting on the fence. Let's address that first, and then we will go after the break and address the second question of investors looking to broad-base their portfolio. So for first-time home buyers, Sameer, is this the right time to buy?
Manisha, I would agree with the other panelists that this perhaps is the best time for the end users and the first-time buyers to buy property. Multiple reasons for that. Like you said, the prices have come down to a 5-year low. With implementation of GST, there's going to be additional taxes. There's going to be some cost increases by developers with RERA coming in because of the strict regulations that developers will have to comply with. Keeping those factors in mind, I definitely think that there could be no better time than now to buy real estate for an end user and a first-time buyer. Just a caveat that I would recommend them to buy properties that are completed or nearing completion even now, because a lot of developers even today are under stress and they are focusing on execution, but some of them lack still funding, and there are many reasons why their existing projects which are under construction will face more delays. So that's why. And lastly, there is enough supply in the ready stock that is available in the market at very, very attractive prices that you know, the dream of buying your first house and moving into it immediately can get accomplished right away.
Okay. All right, so you're saying no better time to buy than now if you're an end user or you're a first-time home buyer. Harshungta, I come to you with a lot of repetition. What is your pronouncement for end users and first-time home buyers who are sitting on the sideline? Is this the time to buy?
So Manisha, I need to remind you that as far as buying your own home has been concerned, I have always been in favor of buying your own home. You know, on this rent versus buy debate, I have always been on the buy side. Not as an investment, but as a home. But coming to your point, why is it a good time today to... I completely agree. So you need not have that repetition. I think lots of things have happened. Two, as I think everybody has mentioned, the confidence that comes from RERA is that no longer is buying under construction, you're not lending money to the builder any longer. I mean, I had always mentioned that buying under construction was not buying property. You were lending money to the builder. I think even if it is still lending money to the builder, it's under far safer conditions with much more balanced contract between the two. That's one. Look at, and if you just move away from larger value properties and move away from a Bombay, Delhi kind of a centric view, look at the goodies that are on place. You look at the Prime Minister's Awas Yojana. Now that may not amount to much. I mean, only probably 60,000 people will be able to get that subsidy. But I mean, at some point when this rolling picks up, there will be a scramble to make sure that you get your PMAY subsidy. And that itself should give an impetus to getting the demand up and running. Look at the changes in Provident Fund. You will be able to withdraw 90% of your Provident Fund to pay for the house. Not just that, you can even pay your future installments, future EMIs out of your future contributions to the Provident Fund. Now, I think employers have been arguing...
And this is something you've been asking for a long time.
Absolutely.
You could actually go further down and link your Provident Fund with your home EMI. That's the next step the technology can enable. All right,
it's already there. It's already, I mean, in principle it is there. Whether they will actually implement it in the spirit in which they've still got those little things that 10 people have to form a group, etc. I think as an industry, it's at a takeoff stage. At least if you think of first-time home buyers and you're talking properties of 50 lakh or a crore. I mean, till that time, that 2.5 lakh subsidy, 2.35, 2.4 lakh subsidy, and the availability of your provident fund, which remember comes, your employer's contribution, remember, comes out of without having to pay tax, and now that can be used to pay your EMIs. I think it is very powerful. I think when these factors all coalesce together, we will see a big rush for that segment, 50 lakhs to a crore.
50 lakhs to 1 crore, big rush. Now, some of the key takeaways which I've been hearing, gentlemen, is that Sameer Jasuja is saying, and he's really not said that in the last 2 years of this programming, that prices are likely to start going up now because of RERA compliance. You know, you tend to, every time developers say this, Anuj Puri, you tend to disregard it. You say, of course, they are only going to talk about prices going up. So do you believe that actually prices are also likely to see a little bit of firm up going forward? And if that's the case, they should buy now? Or do you think that even if they wait out another 6 months, there is no cost to waiting? They can take their time and get the best deal.
So, Manisha, I'm going to answer it in 3 parts. The first is that if you look at the last 6 quarters, every quarter the demand or the absorption has been more than the launches. And it's not that the demand has increased manifold, it's just that the launches have gone down. So, you know, remember that the unsold inventory which was there, the last 6 quarters, it has been coming down because the new launches have been lower than what the sales or the absorption has been. Second is a very important point, Manisha. We haven't really debated that, you know, on a panel with you, but I have discovered in the last 3 or 4 months this very important point where the developers for the first time are not only looking at what their cost is. So previously their argument was, Anuj, this is our land cost, this is our construction cost, this is our financing cost, this is our marketing cost, and we are very thin on profits, which is like, you know, 3%, 4%, 5%, or in many cases it was cut to cut. Today, the developer is saying is, let me put myself in the shoes of the buyer and see what is that the buyer wants. Now, absolutely, Manisha, and this is where I think is you're going to see the crux over the next 6 months. They're putting themselves in the shoes of the buyer and they are now looking at the ticket price. So they're making the apartments efficient, productive. Previously, you know, 3-bedroom was 1,800, 2,100. It didn't matter to them. They never looked at the plans. They were like, the buyer has to pay for this. Today, they are really concentrating and saying, how can I do 1-bedroom? For example, Manisha, you and I have debated in Bombay, can we get anything in Andheri at less than 1 crore? There wasn't. Today, there are products that are getting launched now at less than 1 crore. This is where I feel is that the developers have woken up and have said is we need to put ourselves in the shoes of the consumer. We need to bring in efficient, more productive. We need to apply ourselves on plan, just like what happens in Hong Kong and Singapore. This is where now you're going to start to see affordability coming in, and not necessarily I say is that the buyer looks at per square foot price. Buyer looks what's the total price that I have to pay for the apartment. And if it is less than 1 crore, it doesn't matter to him whether it's 12,000 or 10,500. That's where I feel is that you're going to see this lockjam break and the market started moving, apart from what we discussed in the first part of our discussions.
Okay, so a lockjam break. On prices per se, Amit Bhagat, what's your view? I mean, in that recent interview I did for you for digital, you said that even in a market like NCR, which is right now inundated with unsold, probably has the highest inventory unsold, you believe that at least in next 2 to 3 years, you will start seeing prices firming up. Give me your rationale.
So one reason is the implementation of the regulation. Customer is now empowered. Developer is conscious of the fact that he has to be compliant and he has to deliver on time.
But how does that affect the prices?
So I think it will affect the prices because people who are not able to deliver will get impacted adversely by the implementation of the regulation. And they will eventually not be able to deliver. Coming to the point of the reduction in launches, the reduction in launches will further lead to reduced supply in the next 2 to 3 years' time. And that is the reason when supply will get impacted, prices will remain where they are, but the absorption will increase. And probably third year down the line, you may see firming up the prices also. So customer has also realized in the last 5 years, 3 years, prices have not moved up, but rather they have been coming down in terms of schemes being offered by a developer. So today, when regulation is in place, customer is empowered, developer is conscious of his delivery and commitment to the customer, and there is reduced launches, the prices are bound to go up, and the customer is realizing that. And then when he's empowered, he will start buying.
All right. On that note, we're going to slip into a break, but when we come back, if you're saying that new launches are likely to come down and you will finally see a price increase in real estate, residential real estate, which has been missing from the market, it has also pushed out the investor. Is it really time for you to broad base your portfolio with a second real estate asset? That's also a question to be asked, because traditionally real estate has been one of the most favored destinations for Indians to invest in. And despite the fact that last few years you've actually seen a negative market adjusted for inflation, historically it has not been that bad an asset, or has it? We'll come back and discover that. Stay with us. You're watching Urban Reality. Should you now start actively hunting for a good bargain in real estate with prices at a 5-year low adjusted for inflation? We've already culled out very compelling reasons for a first-time or end user to buy a home and take the plunge and not wait on the sidelines anymore. But what about investors? Shall we go ahead and put all our money in stocks, or can we still diversify with one other real estate asset in our portfolio? Sameer Jasuja, you know, we've always believed that, look, it's good to have a home that you live in. Of course, that's got social value, that's also got an emotional value. And in the past, we've also been saying that have another home. Rent is inflation proof, and it's also a hard asset to own. Today, looking at the market condition where investors have fled the market, are there any spots that are investment worthy?
Well, Manisha, I would not recommend investors to look at the real estate market, at least for the short term. For the investor, there's still a lot of pain left in the market, majorly because of the oversupply in both ready and under construction stock. The confidence levels of the customers and has to come back, really, whether it's an end user or investor. And many investors are stuck right now who need exits. Till those exits don't happen, the fresh set of investors are not going to come in, because there's no return really expected in real estate, at least on the residential asset class. Of course, commercial asset class is still looking very attractive, and rental returns are letting many commercial assets getting sold to high net worth individuals. Even though one thing that I'm seeing as a first-time trend in residential real estate is that because developers are today desperate to sell real estate, they are offering assured returns even in the residential asset class, which has never been seen and has been totally unprecedented before. And I would recommend all investors not to go and be very careful of such schemes, and they will be stuck.
Absolutely.
They could get stuck very badly, like many assured returns.
Very badly.
Customers have got stuck in the commercial segment as well. So
I agree, and thank you so much for that warning.
Yes.
Let me move ahead.
Harsh, at least for the next... Sorry.
Okay. Harsh, I'm going to come to you. What's your own view? I mean, you won't deny the fact that we've always actually had in the past said it's not a bad idea. If you need to diversify your assets, you have a market which is at an all-time high, liquidity chasing it, doesn't seem to be pausing for breath, expensive, inexpensive, yet you have an asset class which is surrounded with all the gloom and doom that you can hear of. What's your view?
So I think one, to have a property as an investment, you need to have a huge portfolio, because it's a lumpy portfolio. It's a lumpy asset. So, I mean, and it cannot form, in my view, it cannot be more, should not be more than maybe 10 or maybe 20% of your portfolio. So your portfolio needs to be huge to be able to absorb a 10-20% thing in real estate. A bigger thing is now fresh kind of investments are available. Rates are available, which will typically give you exposure to commercial property, where you can limit the size of your investments, you can diversify your investments. Currently, mostly that's likely to be commercial property. Maybe going forward at some point we would have others as well. I think we are soon going to start getting derivative instruments, and those derivative instruments would do well, even whether it is a portfolio investment or something, they would now start doing reasonably well as the underlying market would, because of the regulation being in place, and therefore the lumpiness of the asset might go away. And instead of investing in a single asset, you might invest in investment managers such as Amit or somebody else, whosoever is raising money for this.
Okay, fair enough. Amit, what's your viewpoint? Very quickly, we're running out of time.
So I think one is a matter of what is your allocation to real estate first. Secondly, as markets mature.
So Harsh said up to 20% is not a bad allocation, provided then of course you need at least a portfolio of 8 crores to have 20% of real estate, isn't it?
Valid point, but at the same time, we also have to see as the market consolidates and matures, we also will start behaving like equity markets, where a fund manager can do a better job than you taking that risk, a concentration risk in one city. So it is better to go through a fund manager and diversifying your investment in various cities.
Okay, all right. Anuj, last word to you and we'll wrap out.
Yeah. So, Manisha, my thought is what Amit and Harsh said is, if you leave the fund management and REIT, which I think are very good investments on one side, if the buyer wants to invest direct in property, short-term investors, not a good time. I completely agree with Samir. I think on the mid-term, long-term, I am going to change my stance from saying is, no, it's not a good time, to say start looking at it. But I would say is investment up to 1.5 crores of residential properties, which is under construction in RERA approved projects, because I do believe is that the rental returns will start to go up. So 1.5 crores, mid to long term investor, good, short term, not good. And then what Amit and Harsh said is absolutely correct. Invest in funds and REITs as and when they come in.
Okay, specify mid to long term for us.
So 3 years onwards, minimum 3-year horizon.
3 years onwards.
Not like what NCR did in short term.
Okay, no 3 months rotation of money in real estate. That game is out, I think. Most investors do know that. Gentlemen, thank you very much for joining me today on this discussion. Well, buying your first home isn't a spreadsheet decision. It's an emotional and a social one. And I can say the universe seems to be aligning in every which way for the first time or an end user home buyer to go out there and buy and get great deals. Starting next week, we bring you a special show dedicated to making your home buying experience an informed one. So do join us at 6:30 p.m. on 26 July. That's the date. Don't miss. Goodbye.